Hello and welcome back to another edition of Fun Friday with a very special guest, of course, a partner, a capital raiser, and a friend, Barrett Oakley, founder and CEO of Oakley Capital and founder and CEO of Southern Property Management Group. Did I get that correct?
You did. You nailed it. Thanks,
Very
Greg.
good. Awesome. Well, welcome to the show.
Yeah, thank you for having me.
Absolutely. Well, you are up to many things. We were just talking for a couple minutes here before, of course, getting on, just to kind of figure out how we're going to structure and navigate the show. But we have so many directions to go in. So, first off, let's just start with a simple question. How did you get into real estate?
Yeah, I had graduated from college. I was working over in Atlanta, and the company I was working for was acquired. And I started thinking about it, and I was like, and now I live in Birmingham, Alabama. I've been here for over 20 years. And I was like, wow, what do I really want to do? And I had some friends that were in the industry, in the apartment industry, and my brother was in it. And I asked him how he enjoyed it, and he loved it. And I was like, wow, that's something maybe I should pursue. I could see myself doing that. And so it was just a timing thing, and got into multifamily, back around 2005. Right when it was about to get really good, and so it was a good just a lot of it luck, but and then it turned into, now we got to do the hard work. So that's how it all got started. And one thing led to another. We we get going, we start working, and we do our things. And we started like the old fashioned way. Back then it was, drive around, find some distressed assets, pull it up on, pull the tax records, reverse phone number, look up on the whitepages.com, which you can still do all this stuff. It still works. But and then just start calling people. And okay, well, now you've got someone, maybe you got some maybes after 100 phone calls, right? And I basically harassed this older man for about 3 or 4 years, who had this kind of dilapidated portfolio over here in South Side of Birmingham, and finally got him to, after many times taking him to coffees at the coffee shop, and over years and years of just being patient, he finally agreed to hold the note for us, because we didn't have any money. I mean, they're like, the bank's like, who are you two goons? My brother and I, we're like 22. And like, what are you doing? This place has one tenant. The numbers don't pencil. We're like, you have a point. So thank God Richard, my old friend Richard, he saw something in us, and he held the note for us. We filled it up after a bunch of sweat equity. I mean, literally, there was a prostitution ring across the street at this new development that stalled out whenever the market stalled in 08, 09. And so a bunch of squatters were across the street. Supposed to be this big, beautiful development that our friend and mentor was in charge of. And he's like, we're gonna punt, guys. This is not gonna work. So that's what we got across the street. So that didn't help us with the lease up at all. But we got through it, and we went back to the bank, and they're like, good job, guys. And we got a loan with the bank. We paid Richard off, and off we went. That was our fourplex, Highland
So that
Oaks.
that was the first acquisition in the real estate world. So you said that was roughly around
Yeah.
2009, 2010, tentatively then?
That was like that was more, yeah, that was like 07, 08. Yeah. The first real one that we had, somewhere back in 06 maybe. Yeah, somewhere back in there. And
So that was the first real estate investment.
that was it. Yeah, fourplex. So
Very cool. And so you
um
were working with that company before it got absorbed. And then, as you mentioned, you've got about how many doors now under management for the property management firm that you created?
well, after last night, we had a big win last night, and so we're just shy of 10,000 doors.
Wow. And is that those are
So
single family homes, you said?
they're comprised of single family homes, townhomes, and condominium associations. So it's all owner
So
driven. No apartment. We don't manage our own apartments.
gotcha. So this is more of a mom and pop kind of owner, kind of like a turnkey venture solution where someone effectively buys a place and kind of throws the management to you and you put your systems in place there effectively.
Well, think about large residential gated communities. That's what we manage.
Okay.
So we're running all their business for them. So we're managing all the common areas, all the owners, all of, if they have tenants, all of clubhouse leasing, tennis courts, golf courses, whatever's there, any amenities that they've got, if those are going to be rented, anything like that, we're paying all their bills, negotiating all their contracts, everything, top to bottom. And the board makes the decision. So the board sets the policies and we operate based on those
So,
policies that are, outlined in the covenants and restrictions of that community.
so how did you get into that? So you clearly, yeah,
Great
because I mean,
question.
property management, to scale up to that too is very impressive. I mean, that's a lot of volume we're doing there. So be curious to know how you got into that, how many employees you have, what sparked that, and then we can kind of go from there.
Yeah, great question. I get asked that a lot. And I'm like, yes, I signed up for this, because it is a
Management
thankless
is not the
business.
sexiest job in the world. Believe it or
It's
not, it
not.
is incredible returning revenue if you can do it, if you put the right systems in place. But being in the weeds in the trenches, I say this all the time. I don't want to be an operator. We're obviously operators at Lone Star Capital, but I raise equity and get to do the fun stuff like schmooze people like you, take you out to dinner, drink the wine and have the steaks and let, the hardworking people actually, have people move in, move out and, collect rents. I don't want to do that. I want to do the cool, fun stuff, at least in my opinion. So it's crazy to
Sure.
hear your perspective, which you do both, it seems, because you obviously raise equity, but you have scaled a property management company from nothing to everything to 10,000 doors, where you probably at one point were, snaking, plumbing lines, things of that nature, to now probably automating the process, right? But at some point, you're probably doing everything. So I would love to hear that inception.
Yeah. So back when the market turned sour in 08, 09, and all of our clients, when we were at the brokerage, we were, I used to work for a multifamily brokerage company after I was a landlord tenant rep, after I worked for a leasing company, after I leased office space. So I've done a lot of these things, right? And I realized that management is thought of as the underbelly of the real estate world, right? But I bought an investment here in Birmingham. My dad had one next door. This is a condominium association. My cousin lived there. And our management team was terrible. I was like, why is it taking so long to get someone on the phone, someone to come over here? We've got a gutter that's hanging off. This place just got built, 4 months ago. We already have issues. What's going on? We had a board meeting. I walk in there that night, not running at all, but I left that night, elected the board president. And I'm like, why are you electing me, guys? I have no experience. They're like, well, you always have the answers. And off we went. I say, well, I'll do it for half of what they're charging us. I'll hire a CPA because I don't want to handle the money. And I've got a full-time job at this time, managing 1.5 million square feet of office, up an office portfolio in Birmingham and Oklahoma City, and throughout the Birmingham metro for these guys out of South Florida. And so I just did it in my spare time. And then the property next door, they started asking, because they were developed about the same time. They started asking, well, why is this place looking so good and our place looks kind of crummy? The grass is greener over here. Everything just kind of looks neat and tidy.
Right.
Well, some guy named Barrett owns the unit in the middle and he's managing the property. Well, can we talk to Barrett? And this is like people walking their dogs out on the sidewalk one day. Like, sure. So somebody came to me and they're like, would you be interested in talking to this place next door? They want to kind of bolt on to us in a way and have you manage potentially. And so I talked to them. We started doing it. Again, you're talking about a 6 unit and a 5 unit, nothing major, right? They just do that in your sleep, arm behind your back, whatever. You can still beat this other management company in a ring all day long. And that kind of snowballed into being at a charity event one night. And a lady comes up to me and she goes, hey, I hear you manage condominium associations. I'm like, well, not really. I've got this other, like my major job that I do. And she said, well, could you help us? We've got 40 units and we're in dire need. And the same management company was managing them. Okay, sure. I'll think about it. And we go back and forth. We end up doing it. And then we get the one across the street. So it's the same thing. And I started to realize the light came on. It's like, there's probably a business here, because I'm not saying this is true for all management companies, so I don't want to stereotype, but if you just hired the right people and had a really strong team of people who were sharp, cared, and had the team approach, you could probably do this and run circles around the competition. And here we go, right? So it was very organic with the growth. And I quit the other job and I was like, I'm doing this full time, So that that's how we started Southern Property Management Group. And the great thing about Southern Property Management Group is it actually has worked. And, it's allowed me to invest a lot of money into multifamily, value add deals and build to rent communities over time. And so, and we've got an awesome team, and I love the people that work with us.
Well, you know
So
what the light bulb is going off of my head is because you obviously, as you mentioned, to start, you own that unit there or that piece of real estate. Then you started managing, and then the property is around you. And then the person across the street from you calls, okay, well, if that doesn't look as nice as mine, that inherently affects the value of my property. So selfishly, well, why wouldn't I want to manage these all very well, create a better community to uplift appreciation and have some control there? So you can completely kind of control the neighborhood quality control in that regard when you do in fact have your fingerprint there. So it's definitely a selfish interest can sometimes have everyone's best interests all aligned together, which is definitely being accomplished here. So you start scaling up here. You go from kind of doing this as a spare kind of almost hobby to a full-time thing organically, as you mentioned. At what point does a property management company become profitable, scalable? At what door count does that start to really start becoming ROI positive? And then at what point, do you think you need to start hiring on more people to assist and automate the process?
good question. We were starting with just such small communities that it was just like, again, it was like, hey, let's throw a lifeline to the place that I, had vested interest, right? My dad, my cousin as well. So it was like, let's just get this squared away first of all. And so started with that. And then we started getting all these little communities around there. And I think we probably got to 50, 60 doors where I said, okay, I need someone to do this. Like I need an assistant, and put an ad on a line. Of all things, Craigslist is where I found a lady who worked for me for 10 plus years, who was an absolute stud. She'd been in the management and development business for over, 25 years at that time. And she just was amazing. And so she helped me build the company. And so off we went. She started as part-time. I worked from home. I worked from home when work from home was not even a work from home. Like it wasn't even, mentioned. It was like, oh, you go to the office and do all this.
Pre-COVID,
I'm
yeah.
like, we've got to, yeah, like we're going to run this thing lean and reinvest in the company, and not, pay an office lease. So that's what we did. And so we invested in our people. So I kept giving her raises and bonuses. Then we brought another person on as we grew, and it just started going. I mean, and I think where it really took off is where we met some developers who, are just building new communities, and you're just kind of there from the very beginning. And so, as we say, like you're just kind of catching the car right when it comes off the assembly line, but you help build it. So you help them, you set them up for success with their governing documents and things that, because everybody's got blind spots in life, right? And you learn over time, I can help you and you can help me find those blind spots, if we trust each other. So, yeah, that's how we kind of got to where it was scaling. We started adding more people on. Now we have, to answer your question in a very long-winded way, is we've got over 10 full-time people, and we deploy some really great technology to automate a lot of processes for us. We've also got, we worked with 190 third-party vendors last year. We have 2 maintenance teams of 10 men plus that are highly skilled, that I hired once they kind of proved themselves to me as just being a third-party vendor that was just always dependable. We brought them on as our maintenance team. So that way we don't have to worry about third-party people not showing up on time, smoking at the property, cussing around children, whatever, and they're punctual and they stand by their work and they do great work, or I wouldn't have hired them to begin with. So
Awesome. So that's the property management side. It obviously took about, almost a decade and a half's time to scale it up, to start it, to realize there's actually a business endeavor there. Let's talk about capital raising and real estate investing. So you obviously had the sweat equity deal there where you charmed someone, knowing you, of course. I don't see you struggling with that side of it, but you're charming someone into and persuading someone into obviously the acquisition there. But when did real estate capital raising kind of become, also kind of part of your business and something that you do? Because you obviously raise a lot of equity. You're in multiple asset classes you alluded to. So just starting it on the inception there, was that also an organic thing where you kind of had the inherent interest to want to invest yourself, and you kind of like, hey, a country club raise where, are you guys interested in this as well? So what was that kind of origin and inception story?
So that really started, you know, percolating in my mind. I'd say, 5, 6 years ago, really seriously, because I was investing my own money. I saw it was working, and then it's like you turn into this evangelist almost. It's like, and my grandmother said, I always thought you'd be a preacher growing up. I'm like, no, this is about as close as it's going to get, Grandma. I love you. But but I was like a real estate evangelist, if you will, right? And so you see it working and you're like, well, I want to share the good news, right? Because it does, and it's a pretty nice deal. And obviously I love it, or I wouldn't have built a company around it. But yeah, the light comes on for you and you're like, I want to share this. It's good news. And couple that with the fact that if you have a fund like we do, um, hey, we all win when we go together, right? And the bigger checks we can write, the better the economics get, because it's a win-win, right, for both parties, because it saves you guys time, and anyone we invest with time, and we've got our core group of guys, plus we're bolting on more and more and more as we go along. And so why wouldn't you do it, right? It's fun too. I mean, look, the management side of things can be a real bear some days. I mean, you're like, what am I doing? And you're just grinding it out. Capital raising, it can also be like that sometimes, but as you alluded to, there's a lot more fun things to do, once you get the work done, outside of the office, so to speak. You can go play golf. We can go, to dinners, celebrate the wins. That's a lot of fun, right? And so, for all those things, and many more is how we formed Oakley Capital and why we did it.
I have to imagine the synergistic relationship as well between having a property management company, seeing the pitfalls of that, realizing the incredible emphasis and importance that property management and operations to a deal has is beyond crucial. So I'm sure on your end, when you raise money for a group, the scrutiny that you probably place on the teams, the operations, is really immense, which probably helps you pick winners better than the average capital raiser. Would you think that you kind of attribute a lot of your success in that space and, picking good deals is from your kind of acumen and background with regards to kind of the operation side?
100%. You can be a great underwriter. You can know your model. You can know all those things really well. But hey, you close the deal. Now the real work begins, right? And how do we manage this asset? And what kind of numbers are we looking for? What kind of KPIs are we looking for? If I and so that I think about that a lot, Craig. It's interesting you say that, because if I wouldn't have started SPMG, I wouldn't be as good at doing what we're doing at Oakley Capital now, because you need to have that well-rounded uh, skill set, frankly. And so where the red flags are when you see underwriting that looks bogus. That's back from the brokerage days at the Oakley Group, where I worked with my brother, and that company ended up getting acquired by what is now Berkadia. So you go back to those times and that experience, then you go back to SPMG, which we're still obviously doing today, and that's all we do is build budgets and look at monthly financials, income statements, balance sheets, you name it. Collections, huge. How are they doing on collections? How are they doing on the capex? Like, we've got all that. I mean, I'm eating and breathing it every single day, and everybody on the team is too. So it's nice to know that those muscles have been, worked constantly for the last, 15, 20, almost 20 years. God, I'm dating myself, but getting on 20 years now, man. Time's flying, but it comes in handy. You can't beat experience sometimes, So yeah,
Yeah.
that is 100% true, what you were saying.
And then, so with that said as well, what are you looking for when you're going to make a real estate investment or when you're raising for a deal from a group perspective? How you vet the sponsor, what metrics you're looking for, how do you get comfortable? Because naturally, you're a charming guy, you're very well connected, you know so many people. If you raise money, deals will somehow find a way in your inbox. So, how do you kind of decipher who's legit, who's credible, who's worth your time? because obviously capital is slightly limited in the sense that there's only so much we can raise. And frankly, there's only so many deals you can look at a time. Unfortunately, it's not like we can, raise and build relationships with everyone. You kind of have to be very, very particular, and you have to have probably a nice guard up with regards to saying yes and no to things. By things, I mean deals. So, when you're looking to make a real estate investment or raise capital, what are some things you look for? And then I guess also on top of that, from a sponsor perspective, what gets you comfortable or uncomfortable?
So the process it sort of goes like I'm gonna do my homework on them first. Look at their background, look at their track record. What are these guys about? These guys and gals about? What are their core values? Or are they just kind of blowing smoke, right? And so I'll do a lot of homework, and anytime before we make a decision on an operator, there's a lot of time that goes into it, and a lot of watching and seeing how their operations go, looking at their numbers, obviously, looking at the deal quality. Are they really spread out, or are they hyper focused on certain markets, which I truly believe you should be. And so those are the starting points. And then I've always invested my money first before I even bring anybody else in. So I'm going to be the guinea pig, and when I'm comfortable enough to do it, I do it myself. It's what I do with Lone Star, as you know, and I loved you guys' processes and how things are going, and so that got me comfortable as well. But you've got to just know what people's core values are. You got to get to know them. That's why I flew to New York to meet with you guys, and really enjoyed that conference. Whoever's watching this, they put on an amazing conference every year. So book your ticket while you still can. It's going to sell out. So save me a seat, Craig. Though don't
Yes.
let it save mine. Perpetually, please. But yeah, so those are all the things. Really, have these guys had successful exits? How are they operating? Are they vertically integrated? All those things that, I mean, I've got a 200 to 300 check mark checklist in my head, and I've also got a spreadsheet for it. But so we go through all that, highly scrutinized people, because you know what, you're going to be either friends or enemies with them for at least 5 years.
Yeah.
you know so I mean, I fly to the properties, and I flew out to some of our properties that we just acquired. I walked those properties, and we're going to continue to do that. Comb through the financials every single month. It's trust but verify. I mean, I love you guys, but it's my capital. It's my other friends and people who
Well,
trust me to do those things.
it's my money and livelihood too, because I'm reliant upon the upside for my life. So we want you to scrutinize that. And frankly, there's some partners who I don't care for them to walk the properties. I don't need them to, because they just don't know what they're looking for, and they're going to cause more of a nuisance than value. But you
Sure.
are the latter of the equation there. You are someone where it's like, actually, would be curious to know your takes. Where are the blind spots, as you alluded to earlier with the management company, right? Where are the pitfalls? Where could this go wrong? And I guess, do you work with anyone who's not vertically integrated from a sponsor perspective, or is that one of the pillars that you need to see is vertical integrations, or do you have to get really comfortable with the third party management?
I do not work with anyone with Oakley Capital that is not vertically integrated. I think it's a risk.
Okay.
We have our own apartments that are not syndications, where we do work with some third parties, but we have long-standing relationships with them dating back to when we were brokers. So we know them. They're here in town. They've been in business for over 50 years. They're strong, and they've got great construction crews. They've got great people to perform the capex. They can go in and execute a business plan at a high level. So we're okay in that sense. But that is the only exception, and that's just my own money and not anyone else's. So I
Yeah.
truly believe that, and again, dating back, going back to the management experience, I know what these managers do. They just stack on new properties on these managers, trying to make more money, and they're spread so thin that they can't even get to the maintenance.
Well, I was going to
You know,
actually mention that as well. I kind of feel, and this is something, a pitch that I truly make myself, and this obviously, of course, is not subject to your property management team, but it feels like property management is a slight race to the bottom, in the sense that They do just enough to not get fired, but just enough where they can stay there, collect the fee, and then add to their portfolio. And then if you get on their case, they'll do enough, and then they'll be left alone, and then cycle, repeats, so on and so forth. So would you say that's a pretty accurate description with every other management company for the most part, with the exception of yours, of course?
Yes, of course, not with us, but that is the trend, and that is what we see. And sad but true. But that is why we tell our clients, and so I understand that, right? And I'm like, look, I own a bunch of property. A lot of people can't say that. When I go pitch for SPMG, it's like, look, I'm a real estate guy, and I'm like, some of these other people that you're talking with, they may or may not know things about roofs. They may not know things about plumbing, and they might not do HVAC, and have all these vendors that work for them that give them really great feedback on top of what I've experienced over the years by doing all that stuff. And I just know that that's what they do. And so we're still thought of as a boutique, even though, shop, even though we've got almost 10,000 units. They're like, oh,
That's beyond
and I'm like,
boutique.
the
But if
manager that I'm putting on your property. I was talking to somebody yesterday. They've got two properties, two. That's it. But they're great properties. They're huge. They're big revenue properties. I mean, they're high end, like some of the nicest communities that are here. And the board may be high maintenance, because there's a lot of people on it, but that's okay,
If
so
you can give, I mean, if you can give people a boutique experience, but still have 10,000 doors, that's probably the business model and the equation you're looking to solve for, right? Where they can actually get a hold of you or the, decision maker, key people, and still feel like they're getting great service. But you, of course, know the scale, what you got behind you there to make it happen, obviously, with your team. So that's probably the special equation to solve for if you are in the property management side.
yeah, very true, very
Yeah.
true. Easier said than done. It's a battle every day to do it, but
Yeah.
yeah,
So
we do okay at it.
what type of deals do you typically raise for? I think you mentioned obviously we're multifamily, but would love to explore the other kind of routes that you bring capital and equity to and that you invest in personally.
Yeah, mostly multifamily, as you said. I'd say 70% of that, 75% has always been value add. Here lately, we're seeing some opportunities that we haven't seen in quite a while, where you don't have to go in and execute some radical business plan. And you know what
Sounds
I'm
like
talking
you're
about.
foreshadowing on it's something that we may or not be working on. You're coming up.
Yeah, I mean, maybe.
Yeah.
And then we've done some build for rent community. We've got a lot of build for rent communities that we've invested in, me personally. And we even did some mobile home communities in Tennessee not long ago, which we've exited and did very well on. So that's it's like, hey, I mean, we've got a pretty rifle approach instead of a shotgun approach. It's like, let's just get hyper focused on what we know and stick with that and really dive in.
Yeah.
So multifamily all the way. We love it.
It's funny you should say that because you clearly, with your, acumen of being able to see homes, see, built to rent communities, multifamily communities, it makes sense for you to invest there. Similarly for myself, obviously I have the insights and the insider knowledge, frankly, with Lone Star Capital. So naturally I'm going to invest heavily there. But similarly, I know single family homes like the back of my hand, having sold over 100 of them and toured thousands of homes. I know the ins and outs of a house, what, trouble falls may be, where to, basically park your equity into a good property, where to put your money if you want to improve it, so on and so forth. So I think it's so key and crucial to have that and that experience there and to invest in what you know, because then you truly get insider like returns. With that said, what are some of the key metrics that get you excited or nervous for a deal? What is kind of there to make you say yes if someone kind of throws you a deal? What's the story? What's the narrative? Are you a numbers guy? Are you a story guy? Are you a vintage person, or are you pretty agnostic? Let us know what gets you to say yes to something, or kind of gets your juices flowing.
Good question. Yeah. So I would say story. We always start with story, and then we get into vintage and history of the property. Who's had that property? What's it look like financially? What's it look like physically? Um, those are the first questions that go through my mind, because look, I mean, you've been doing this a long time. I mean, the returns are all, I mean, if somebody's got something out there and they're promising this crazy IRR that's unrealistic, you're like, and
Run.
then these
Yeah.
these rent bumps that are going up 5% every year, you're like, no, absolutely not even 3%, not even 2% sometimes. It's like, okay, let's get real here. So we'll stress test it. I expect the operator to stress test it as well. So I'll stress test their stress test, and then I'll put a little extra on it just in case. And then yeah, and I'm all about some later vintage these days. Nothing wrong with 70s, 80s, 90s, even. I've got a lot of that in my portfolio, and but if sometimes that stuff can limit you. You kind of get to where you can't really push those rents, and you can't really keep improving something that's just old, and you're just like, this is it. This
Y-
place is
y-
kind of peaked.
Well, and
you
and
know
I always want to exercise caution to people, and I think the canary in the coal mine on this one was certainly experienced in 2021 and 2022, and you're going to laugh at this, but if someone bought a place for 19 million, call it in 2018, and they're selling it for 35 or 40 in like 2021, 2022, and then they're also a sponsor looking to make a 15 to 23 IRR, which is what a lot of people kind of typically come in for, which 23 to me is a little high. That sounds like a project level if it's a good deal and that's even ambitious. But how
yeah,
are you going to take, the deal that went from 19 million to 35 million and then go from 35 million to basically like 45 to 50 in that period of time? 19 to 50 million dollars in a condensed period of time means you're gonna have to push rents on what's been pushed. That's not realistic. You can't put lipstick on lipstick on lipstick thinking you're going to over improve a property. Moreover, there's only just a natural barrier to what a tenant can pay. So,
right.
something I really think about is how many times has that property been turned over in that period of time? And I'm so happy you just mentioned that because there's only so much you can do. Now, if you're buying a place that is 70s, 60s, or 80s, or whatever it may be, that last traded in, call it, in the OOs or maybe late 90s, perfect. There's probably a lot of meat
Hmm.
on the bone there. It could be a mom and pop operator. It could be some institutional group that just, hey, their basis, they made a bunch of money on it. They can kind of let go of it. Maybe they're going to be less particular on getting the highest price. They just want certainty of closing, and maybe they're looking to retire and put their money somewhere else. That's the story that I like. But when I see a property's been flipped, okay, massive red flag. You're the sucker who's buying this, and you're the sucker that the bank's gonna, take the property from, or you're gonna be the suckers that get capital called, or in a zombie property, or in something where you aren't gonna push any value there because there's no value to be created. You're basically the end buyer there, and you better get it for a good basis, and at a handsome enough cap rate because you're probably not gonna push yield on cost much more
That is exactly right. It's sort of like musical chairs. You do not want to be the last guy,
when the
standing
music
up there.
ends. Yeah.
You have no chair to sit in, and you've just caught a falling knife.
Yeah.
So that's never good. You described a bunch of great scenarios to look for,
Yeah.
ideally in the story.
We
You kind of
hope to
start
buy
with that.
those. Yeah. Now we want to buy
Yeah.
the properties, frankly, that are, bridge maturities coming up, or they've got a floater and they can't make their debt coverage payment or whatever it may be. And we're kind of here licking our lips thinking, okay, we'll buy it probably between, the price that the first seller bought it for and the second one, maybe somewhere here where, we can't push it too much, but if we just buy it here and sell it for roughly around here, well, then we'll collect the spread, obviously. So that's kind of what we're looking for. And I don't think we've discussed that premise on this Fun Friday show yet. So I'm so grateful that we've kind of organically kind of went there because that is something to look for. And just generally speaking, it's like, hey, if you bought a flip, how do you think you're going to flip a flip from a home perspective? It doesn't make sense.
Right.
So why
Right.
are you not applying that same logic and rationale to a multifamily thing? And I think we're so conditioned and trained to this quick money culture that we'd seen with cryptocurrency kind of from 2019, 2018 to 2022, where we saw a wild bull market and wild inflation and money printing where money was really hot, quick, and easy to come by. And now I think everyone's sobering up and not drunk on interest rates anymore, where we're really in the nitty-gritty days where someone like yourself can actually apply rational logic and reason with regards to an opportunity where we can find value to be created there, but not a situation where we're buying the third flip and taking a property from X to an outrageous number. It just doesn't logically add up.
Right. So true.
So yeah. So how it's totally switching gears now, segueing. You were nicely the guinea pig to our back office preferred partner, Tribevest, which if you're working with Lone Star Capital, we recommend Tribevest because there's a very nominal drag on the fund to fund program. However, we invite you to use whoever you want. I just always like to preface that we don't want to pigeonhole anyone's doing anything. It's just we do truly recommend the great people with Travis, Seth, and Brandon over there at Tribevest. But you nicely were the guinea pig there. I think you actually fortunately got to meet them as well in person, which likely knowing you made you feel more comfortable with going that route for Beckley Highland and Meritage, the Houston 3 property portfolio, which we mutually closed together on back on National 1031 Exchange Day. Other people call it Halloween. We call it the National 1031 Exchange Day at Lone Star Capital. But you were the guinea pig there. And I would just love for you to have a testimonial here as to your experience with them, the process, and just overall how it's going since inception there. And it sounds like you must have liked it enough because you're re-upping with them on a new project we're doing here together, which will be coming out maybe in a month or half a month's time or so.
Yeah, they were number one. They're great people, right? Before we even talk
Yes.
about how great their program is and how great their tech is and what they built there, and just the streamlined process that they have, they're just great people. Got to know Travis in New York. Had so we got some quality time together. Really great to see him there at you guys conference. Brittany, who works for Travis, she's amazing. And the whole team. Brandon, it was the first one I ever spoke with. It was Brandon, and he's like, "Okay, we're doing this," And so I was like, "Let's do it." There's going to be some bumps in the road anytime you do it. For the first time, I said, "But guess what, guys?" And we had to say it a couple times because you get to these, little mile markers, and you're like, "Okay, well, don't worry about it. We're going to get through it." And there's always going to be better ways to do it. And so we've even gotten more streamlined in just the short amount of time that we've known each other and kind of worked through things together. So I'll tell them, "Hey, this is what I'm seeing on this end. And you tell me if you see anything that I could be doing better too." I'm coachable. So always stay coachable. And we have. And so that's the kind of relationship I've built with them in such a short amount of time to where we work really, really well together. And um, version 2.0 that we've been working on for our upcoming opportunity is light years better than the first time that we did it, and it was great the first time. So I couldn't say anything more about those guys. They were really excited when I was on the phone with them. They didn't know about their conference, and I was like, "You guys going to New York for the conference?" Like, "No, we didn't know about it." I was like, "Come up there. Let's all meet up there." Travis like, "I'm in." And Seth came from San Diego. It was great. And so uh, yeah, they're all in. They eat, breathe, and sleep it just like we do, and you can tell that they really care, and they've got a really great vision going forward too. They can certainly see past their headlights, as we say. And so I like Travis's vision for the company. They're always improving and innovating, and that's kind of partners we want.
Yeah, and the thing I think about Lone Star Capital, it makes me so proud to work at this firm is I came in at a point where it was functioning, it was a machine, it was well oiled. But even in my experiences being here so far, we're all looking to get better. Everyone's ideas are heard and listened to from partners or mine. And now any little improvement that we do will just be incremental. It'll be a little tweak because it's not like we need to totally reinvent the wheel here, but it's just perfecting the wheel. It's getting a little bit smoother. It's getting a little bit better. It's really truly trying to get 1% better each day. And for the
Yeah.
little things, but the incremental tweaks do make the process better. So just so people don't hear it from my voice only and they can take it from someone who's done it themselves actually, what is the process? Does it truly take 5 days to get the bank account set up and to get everything associated set up with the fund, with the blue sky filings? Can you kind of walk us through what that whole process looks like once more, just so those who maybe have not caught the episodes, and I invite you to look back at the content bank. I did an episode with Dasha who does the onboarding, with Travis for the first episode of Fun Friday, and then a joint episode with Dasha as well as Brandon with Tribevest with regards to the process there to kind of walk people through it. But do you mind just kind of sharing what that step by step is, just so people know from someone outside of Lone Star and outside of Tribevest, but a mutual third party for a testimonial live here, what they can expect if they do partner with Tribevest?
Sure. Yeah. So yes, they will take it. I mean, the difference between what I was having to do before I knew Tribe Best which we have all these things in place. We've got attorneys, you got people, you can file all these things, you can do all these things, all the things that they do, but it's a one-stop turnkey shop to do all of that stuff that takes a lot of time.
That you don't want to
And
do.
you don't want to do, stick to what you know, stay in your lane, just start. And for me, it's like, go raise the equity and like, let's use Tribevest to their abilities because they're great at collecting everyone's signatures, getting all the docs out, filing, like you said, everything that needs to be filed, setting up your wallet, setting up the bank accounts, all those things. And that takes forever. It's just all that admin back office stuff that really is so nice about partnering with Tribevest, and they just do all that for you. It is so streamlined. It's just a great experience, and it saved a ton of time. And they have a very fair, price for doing all that. And so, and again, it's the people. It gets back to the people. To me, it's always the people that make everything in life. And if they weren't great people and they were, a bunch of jerks, then I wouldn't want to work with them. So they're great folks, and I couldn't say anything better about them.
Well, you're putting your money where your mouth is and are truly, mean what you say and say what you mean because you were the guinea pig, as I mentioned, and now you are re-upping with them as well. So that is testimonial with actions as well as words. So thank you so much for uh, piloting that and then being kind enough to re-up it and to speak here on the show and give them some praise. With that said, moving on to kind of the back part of the show here, I like to ask people just kind of their pulse on the market. But with that said, what assets do you think will struggle the most here coming up? It's likely we're heading into a recession. I mean, I don't care if they haven't announced it yet, but everyone's feeling, their dollar going less far and kind of a pinch here going on. You know this better than anyone else. Operations are about to be struggling throughout, properties and whatnot. That happens here. That is the lesson. We'll get into your hot take, which kind of goes into that segment there as well. But there's certainly going to be, worse collections are coming up. But what assets do you think will struggle the most? Obviously, office is an issue, but do you have anything else outside of office, or did I just take the answer from you?
No, I mean, yeah, I think the obvious answer is office. We've all read the headlines. I mean, who doesn't read the Wall Street Journal? I mean, you can find a negative office headline just about every day, and I think it's unfortunately getting worse in a lot of the larger markets. Some of these tertiary markets are holding on, but it just really depends on that market. But I'll tell you, and maybe it's not asset class. I think it's more. I think the root of the problem is these guys or gals got in and they got the wrong debt on a lot of these deals. And so if they got too aggressive, they didn't have fixed rate debt, they had floating, or they had construction debt, something like that. And now things have stalled and they can't get the rents they were hoping to achieve. And they had this wild, aggressive business plan, and they weren't conservative. They didn't stress test, and they were just trying to ride that wave that we had, frankly, for about 5 years. I mean, I look back to like 17, 18, and you could do no wrong, right? And it's like, you could be very green when it came to all of this and still survive and still pump out a 15 IRR for your investors, even if you were just like not even present,
Yeah.
in a lot of ways. And so those are going to be the ones that are going to struggle. I am my heart and soul is in multifamily, and for multifamily, for me, it's just that's the if their debt profile was wrong on a couple of these deals, they've got to unload it. But that's what makes a market, and that's where we've been able to take a deal or two from guys that have a big portfolio, and they've got to shed one that they got a little too aggressive on, and that's okay. They're still going to be okay in most cases, right? I mean, they're big
Right.
operators. And the deals we're buying, that wasn't their first one, in a lot of cases, right? And so they're going to be okay. We'll all be okay, but big lesson there,
Yeah.
for
Well,
sure.
on the flip side of that coin, what assets do you think will do best coming up? Yeah, I think you mentioned build to rent is what you're in. Mobile homes is what you're in. That's obviously mobile homes and workforce housing is epitomizes recession resistant, right? Because hey, last I checked, people like that do blue collar jobs. A lot of tech workers got laid off, right? Naturally, everyone's struggling a bit. Unemployment will kind of spike here, but it doesn't seem like unemployment spiking too high in kind of the more blue collar workforce like jobs, right? So, I mean, that said, what do you think we'll do best coming up? Do you think it's kind of exactly where you're positioned currently, or is there anything else that we haven't mentioned that you think will also achieve good results despite the market environment?
I'm a big believer in workforce housing. If you take care of them, they're going to take care of you. If you're a great manager, it shows, and you'll have sticky tenants, and they'll stay there with you. And if you've done all your homework, again, this is all going back to on the front end. Did you do enough due diligence? Did you really inspect how many times that property's been sold in the last 12, 15, 20 years? Um, what are these operators like? What is their track record? What do their other properties look like? Did you look that up? Did you go drive by those other properties to see? Or do they just throw a bunch of lipstick on this one because they are going to list it in 3 months, right? And pump all their operational people there to really make it look great for you whenever you start doing your inspections and walkthroughs. Uh, if you've done all those things, I don't want to say I'll just say you're set up for success. It doesn't always take care of itself. You still got to operate it at a high level and pay attention, be hyper focused on it. But if you've done those things and you've got the right debt on it and you weren't aggressive in that regard, and you're happy just saying, look, we're like in this market we're in right now, like be happy to get 15, 20% IRR. It's a down market, but that's really good. Instead of just sitting on the sidelines and hoping it's for this magical day to come that, oh, it's time to reinvest now. Like, no, that magical day's not coming,
I
you
don't think
know?
it's ever felt good too to invest. Like I don't think anyone's ever felt like, I mean, there's obviously unicorns. I'm a big believer in this every single day. Obviously not on weekends, something can't close, but you get the analogy what I mean, and the phrase
Sure.
and what I'm getting to here is that every single day, no matter what the market looks like, if it's going super hot, if it's super cold, if it's just neutral, someone out there bought a deal that just made them very rich. And it'll only take some years for that seed to grow and for the fruit to bear. But every single day, someone is doing something like that. And, I don't think anyone's ever like, oh, wow, I stole it. It's very rare, at least, for that to occur, especially in a space that we're playing in. We're playing in institutional
Right.
assets. The market's very well covered. These
Yeah.
big, REITs and pension funds that are equity shops that work with sponsors here are not dummies. So it's really rare to get distress, and we are obviously experiencing some distress if you're at a maturity point, or maybe some people bought the deal and are still positive equity, but they just want to get out of it because they say, hey, we're done with this one. There's nothing we can do. We'll take a 10 IRR or an 8 IRR. We'll roll it to the next deal, and that's that. And that's fine. That's not the end of that's not the worst case scenario, right? So I
Yeah.
do think that is a good point there. With that also said, what is making you most excited about the opportunities coming up? Is it just basically getting in at an incredible basis with all these distress opportunities coming up? Like, what is really getting you absolutely stoked and getting you out of bed, excited to raise equity for deals currently, and maybe even the property management side with that, if you wanted to go there as well.
Yeah. Tell you what's been exciting lately is, as we've mentioned, you've got these deals and these guys have got to get out of them for whatever reasons that we've talked about, but the risk profile is really low on a lot of these, and that's because in the big wave we talked about a minute ago from say 17 to 22, where you could kind of do no wrong. You just, again, that was like it felt like musical chairs towards the end of that, right? And now we've got a reset. And when you have a reset and you can buy at such a low basis, not a lot of risk there if you're buying a quality asset, especially if it's a newer vintage, right? In a great location that may or may not have, a lot of development coming in the next few years around it, right? And so those are cool things, great things to know going into the deal. Again, knowing the property history, um, who's been operating it, and why they've got to get rid of it. Knowing that story, those are the things that get me excited because, like you said, we're buying institutional assets. You don't hear of, oh, I stole it. That's like in a residential kind of scenario. That's in a mom and pop scenario. We're not buying that kind of. We're not buying
No,
fourplexes in Southside anymore with prostitution rings across the street. Thank God.
yeah.
So hey, so we're dealing in at a level where you're not going to hear that. So this is like a huge opportunity that we've had in the last, call it 3, 4, 5, 6 months and going forward for the next year, because just really kind of starting, and if
And
you're,
this
and they
this is
know
gonna
that
be like
you'll,
an
if,
18-month window, I think, personally. Sorry to
yeah,
interject, but I
yeah,
think it's 18 months. And JC Clemens, I said this a billion times, but when we were meeting with him just right around our event, of course, in
hmm
October, he's like, "Hey, it's right now. It might be 6 months, might be 9 months, but the window will be here and gone." So if his prediction is correct, we're talking about, basically July, things going back on, and institutions bringing their equity back, which will just compress cap rates. So this window may come and go very quickly.
yeah. I feel like the institutional capital is waiting on this day to come, like I mentioned a minute ago, where it's like this magic day, and it's probably going to be the first or second rate cut this year. And but right now, let them sit on the sidelines, man. That's more opportunity for us. We
Yeah,
get to go up in an asset class, like we get a later vintage stuff that we'd be competing with, and driving the prices up. We're actually going to get it at a much lower basis, like you said, and huge opportunity right in front of us. And so we got to capitalize.
yeah. With that said, final question I like to ask all the guests. We went over this before, and I loved your answer. What is your hottest real estate take? So mine, with that notion, is I hope rates don't get cut, because if rates get cut, institutions will probably be back in. If rates stay higher, we'll obviously see more distress. Lone Star is very fortunate right now. We're selfishly, we've got fixed rate debt, and basically, 14 of 17 deals, the deals we don't have fixed rate debt, we're just going to be fine on those. No capital calls or pref infusion, so it'll all be okay. But that said, we want as much turmoil and blood in the streets, if you will, in the market as possible, just because we can buy as much as we can. Obviously, raising equity won't be easy, but I'd rather have the struggle be there, not on finding a good deal. So with that said, what is your hottest real estate take?
My hottest take would be, don't miss the lesson that we're getting right now. And what do I mean by that? I mean, you got a lot of these guys and gals that were late to the game syndicators, or they were trying to ride that wave, or they're picking up that property that's been flipped essentially, with 5 different business plans in 10 years, and you're trying to still raise that bar one more time, and it just doesn't make sense, and you get too aggressive. So the lesson is, don't get too aggressive, be conservative with your underwriting, and really, really pay attention to who you are going to invest with. Know that operator, know all their operations. You better have gone up to their office and met them in person, looked at the team members in the eyes, looked at the manager, for example, over in Houston, and said, "Do you have this? What's your feel on your operations right now?" And let him talk to you for a minute. Do your homework on people, and don't just spray and pray, as they say, when you get into the deals, because everybody can put a great presentation together. You know, PPM looks great, and okay, yeah, this and that, but it's like, you should really do your homework, because now you see some of these guys got too aggressive. They overpromised, they underdelivered. They had this crazy business plan where the rents were just going to magically go up and up and up, even though they've been raised 5 times in the last 10 years, and very aggressively. And they've got floating rate debt, or they've got construction loan on there. It's like, that doesn't work. That doesn't always happen. So you're better off just staying conservative, and uh, and just operate the heck out of it, and pay attention. But don't miss the lesson, because this market teaches you, it'll slap you on the wrist. And sometimes it's a paddle on the butt, for other guys. And so we can take a slap on the wrist here and there, but that's how you learn your lessons. But don't miss the lesson of this market that we're in right now, and the people that you associate yourself with.
I love that. Any final thoughts before we let you get on with your day and enjoy the country club?
Oh man, just I can't say enough about Lone Star Capital. I can't say enough about Tribevest. You guys are just great people to work with, and we just had the best experiences with all of you. And thank you for having me on the show today. And I'm looking forward to teeing up with you soon, Craig. So
Absolutely. Yeah. Well, I got to get the game in check. I got TPC Scottsdale right after the waste management with my family in town. So I got to hone in the game, but look forward to putting it up on the tee and letting him rip with you. We really appreciate your business, your trust with us. You're one of the first people I think about when I need to get a reference out there. So we can't thank you enough. We're so grateful for you to be part of the Lone Star team and family. You're someone we always want to call on and raise money from. You know, we do have pretty good optionality this day with regards to capital raisers, but you're without a doubt, when I think about people I want to work with, you're of course one of the first calls. I truly mean that. I can't thank you enough. Thank you so much for coming on Fun Friday, and we will see you guys next week.